Welcome to the show. Be the boss of your money. Stocks tank. S&P 500 is now negative on the year. The most important stock in the world, Nvidia, crashes, and President Trump is not bluffing about tariffs. All of this spells out a pretty dark outlook for the stock market. We're going to talk about that, and we're going to do that now, right after we run the super quick intro. Stick around. If you see anything you like, give me a thumbs up. If you have any questions, comments, hit me up in the comments, and I will be sure to get to you and see those, and I would love it if you would. Here we go. Welcome, people. Welcome. We now have a negative stock market for the year. S&P 500 is down. The bullish calls, the animal spirit, the excitement about the election, the deregulation that was going to unleash the economy. None of that's working out right now. Stocks are down. The big Trump trades in terms of AI, crypto, small cap stocks, they've all given it back. And it's really hard to find something to be excited about. It's not all down. Now, if you're diversified and you have consumer staples and healthcare and financials, you're holding up okay. But if you are really just loading up the boat and not taking any profits in, the Mag 7 stocks we talk about every day, you know what they are. Well, we're going to take a look at those in a second. You're going to be wondering what you're going to do. And today, analysts were coming out of the woodwork defending these positions. Tesla got a big upgrade for Morgan Stanley, top pick in the auto sector. And, this is what happens when stocks start to tank is you get people defending them. No, I'm right. They have this, they have that. For example, Nvidia had a really good earnings report last week. Earnings and revenues up something like 78% or 75% each. But the problem was when a stock valuation goes up so much, it needs more. And then you start to think things could be as good as it gets. Now, for Nvidia, the company, things are going great. They're still growing like a weed. But from a stock perspective, things are probably as good as they're going to get. And their margins came down a little bit. And then Microsoft said that they're delaying or putting off leasing or getting out of leases for new data centers. And I could get into some economic information, manufacturing figures, the PMI service figures came in weak, retail sales weak. Walmart said weakness ahead. Even Amazon is downplaying growth in consumer spending. You put it all together, and now with tariffs, and people are confused. One way we have tariffs, one day we have them, one day we don't. Doesn't matter at this point if we don't have them. People are so jaded or pushed around, boggled. They're just like, let's say their minds are boggled because one day the tariffs are on, one day they're off, and it's just causing confusion. Investors just want to pull back. Businesses want to pull back. What set off the decline today after a very short-lived little teeny tiny rebound early this morning that followed over through the end of Friday was that President Trump said we are going full force with 25% tariffs on our two strategic allies, Canada and Mexico. It's a shame. Canada, I can tell you from everything I've learned, read about it over the last couple of weeks, especially I just dived in deep this summer. I'm sorry, the hell's wrong with it? This winter, it's light outside still at 4:43. I have summer on my mind. This coming Sunday, next Sunday, we turn the clocks ahead. Just as a reminder, it's my favorite day of the year. So Canada is digging in. There are plenty of things that they could have a tariff war with us and make us feel a lot of pain. In fact, proportionately, considering Canada is a much smaller economy than the U.S., proportionately, they actually have a bigger bat to carry. Okay. And every car that's American made has gone between the US and Canada and the US and Canada, probably with Mexico also, a couple of times before it even hits the dealer showroom. Oil, natural gas, agriculture products, lumber, wheat, all of these things, Canada's going to slap on their own tariffs. So everybody in North America is going to be paying more money for everything. And 25% is a lot. And if Mexico retaliates and if Canada retaliates, don't tell me that, like, well, only 10% of the product of this car comes from Canada. The whole thing is touch Canada or Mexico. And it's going to be tariffs in Canada. So that hits GM and Ford. GM and Ford traded lower today. Tesla, which started the day up today, wound up tanking toward the end of the day. Let's survey some of the damage in some of these biggest name stocks. I'm going to make this bigger so you can see it. All right. Let's take a look at this. Netflix, not too bad, held up okay. But you see that red line? Let me make this. Actually, I think I made it too big. All right. See that line? That's how much Netflix is backed off. It's from a tie, but still a lot of green in that line. Apple giving some back, but still closer to its high, well above its midpoint. Google is kind of in the midpoint, so Google's given back a lot of gains, and it's between its year high and year low. Meta is still holding up okay, starting to give back some gains. Stock's down, at $85 from its high. That's starting to get pretty significant. Microsoft is trading near a year low. When was the last time you heard me say Microsoft is trading near a year low? Tesla has given back about half of its recent gain. It's down by about half in the last, 2 months. Stock is down 2.8% today, over $8 a share. Amazon starting to get ugly, and Nvidia is roughly in the midpoint between its high and low. The stock is back to where it was in September, and that whole bullish rally we had heading into the election and following the election is pretty much, it's all gone. Nvidia's chips are manufactured outside of the US, Taiwan, a little bit of Mexico. And so they're going to have a big problem with tariffs as well. Plus, there's lots of export controls on their chips. I agree with the export controls. They're not perfect, but all of this, put it together, hits Nvidia. And when money starts coming out of the S&P 500, by the way, you can't invest directly into an index, but you could invest into a security that tracks or mimics an index. When money comes out, it doesn't just affect the bad stocks in the S&P. It affects all of the stocks in the S&P. So they all trade together as a group. I want to show you a couple of other things. While you're watching this, guys, if you don't mind, give me a thumbs up, and let me know you're out there. If you have any questions or comments, hit me up in the comment section. Right, that's what it's for. I would love to see you there. But let's take a look at some of the notables. All right, let's take a look at how the major averages traded. Let's get back onto the screen here. Okay, so the Dow winners: Verizon, Coke, J&J, Procter & Gamble, and Merck. And if you're a diversified investor and you have consumer staples and things like that, you probably have some of those. But look at the bottom ones. Okay, thank you. Here we are. Look at the bottom ones. Nvidia down 8%, Chevron down over 3%. The feeling is we're heading into a recession. If not a recession, a substantial slowdown in the economy. The Atlanta branch of the Federal Reserve's calculations of it's an ongoing calculation of the economy, is signaling negative GDP for this quarter. Now, just so you know how that works, when early in the quarter, the most recent numbers, the earliest numbers have the biggest sway because every number gets added to all the other statistics that come into this index. So all the statistics, you have a stat today, it gets added to that index. So you start, by the time you get into around mid-March, we're still early March, that by the time you get to mid-March, you'll pretty much know how accurate it is. Coming up on Friday, we get the employment figures. Today, manufacturing figures came out pretty bad. Services numbers came last week were pretty bad. Consumer confidence has taken a plunge, and investor bullishness is still pretty high. He ended up, and it's really tough to say things turn around. I mean, there are a number of strategists defending the market, things are going to turn around. So let me tell you what it's going to be like for the next couple of weeks, okay? In my opinion, you're going to get a lot of people defending things that they've done. You're going to hear people say, "Oh, no, I'm in it for the long term. No, I'm not. I'm in it." Okay. No, Nvidia had this, they had this growth and that growth. People are going to keep going, but Nvidia had such a good quarter. If the stock was a trillion and a half valuation, that quarter maybe would have been great. But when the company is worth $3.2 trillion or $3.4 trillion, a really good quarter is not good enough. We're talking about the stock, not the actual performance of the company. The performance of the company is nothing like we've ever seen. I mean, this is incredible, but it's the stock. Now, I remember very clearly the tech wreck of 2000. I know it's 25 years ago, but I was already in the industry for over 10 years when that happened. I'm no rookie, right? So everyone said the internet's going to be so big, it's going to be huge. And when all these internet stocks like Yahoo and Quest Communications and Lucent and EMC and all these other vaunted names, Nortel, everyone kept saying, but there's going to be great growth in the internet and, internet mobility, wireless internet. All of these things did happen, and they happened bigger than anybody thought, but it didn't do anything for the stocks. The biggest winners of the internet era of the late 90s and early 2000 was AOL and Yahoo. Like now, when you see someone with like an AOL or Yahoo email address, you're like, okay, boomer, right? Almost a Gmail. Google and Facebook weren't even out yet. They weren't even publicly traded. They came out after. So we could hope that these stocks keep going up and maybe they have a rebound. But I could tell you this, every 10 years, the leaders of the stock market are usually different than the leaders of the previous cycle. Having said that, you want to buy great companies? Of course you do. But you have to look at the price that you pay for great companies. And I think Bitcoin, adding to that, has been a speculative froth that's taken over the market. It's been going on for a while, but it really just picked up a head of steam the last couple of months since November. And it's finally blowing up. Even today with President Trump announcing an American sovereign fund that's going to invest in a bunch of cryptos. First of all, that's a horrible idea. Why would anybody think that the United States using government money for a crypto reserve would be good? The whole point of crypto is that it's decentralized. The whole point of it is that crypto is out of the hands of the government, outside of the government's prying eyes, right? So the government can't print more. They can't manipulate crypto, in particular Bitcoin. So how is it that the government putting money into Bitcoin is actually good for Bitcoin? Because it's like against everything that Bitcoin stands for. Now, if you're a true Bitcoin crypto enthusiast, you know what I'm talking about. You agree with that. But if you're a Johnny come lately and you just think you're just going to buy crypto because everyone's buying it, it's going to go up and it's the money of the future. It's like the Dippin' Dots of ice cream, the ice cream of the future. So it's got to go up, and Trump likes it, and the SEC is going to like it, and they're going to be okay with it. No, not good enough. If you're a speculator, Johnny come lately, all right, or just a short-term investor, you love the news that the government, U.S. government's going to create a sovereign wealth fund or something like that and pile into crypto and start accumulating different cryptos. You love that, but that's not really what it's for. And that's really like kind of a violation of what the whole thing about crypto is. But I don't think people even know that. I think the Johnny come latelys of people about crypto in the last few months, the last year or two, they have no idea about that. They just see something going up and they think it's going to replace the dollar. They somehow think it's going to replace gold. They call it digital assets. It's digital. I don't know what makes it an asset, and I have written about crypto pretty extensively in the major media. But maybe it'll work, maybe it won't. In my estimation, I've talked about this, so you have timestamps. I always talk about it. I'm pretty consistent. I talk about this stuff. I've been saying it's too frothy, in my opinion, and I think investors got carried away. And once people got finished making money in the stock market, they thought they could have to find the next big thing that could make them even more money. It's to the point where if I tell people you can earn on average 9% a year in the stock market, people are like turned off. Like 9%, that's all. You got to do better than that. I want at least 50% growth in my account. Yeah. This, by the way, this is not from people who are like 45 and older. This is the under 45 crowd that's saying this. Every generation has to learn anew the lessons that the last generation warned them about. That is not going to change. Human nature is not going to change, and artificial intelligence is not going to change that either. We shall see how this shakes out. Maybe Trump goes back and says, okay, forget the tariffs, or they won't be as bad. But I think the damage is done, whether or not Trump backs off the tariffs, installs smaller tariffs than we thought. I think the damage is done. The trade war is on. The relationship with our allies has been sufficiently broken to possibly needing another 20 or 30 years to repair. I don't think that bodes well for the market. I don't think it bodes well militarily for us. I don't think it bodes well for you. And you have to be thinking, how is this going to affect my retirement? And that's why we preach diversification, not relying on any particular one stock or one fund or one asset class. And we will just keep doing what we do. If you need help with this sort of thing, you can reach out to us. I'm happy to take your call. Thanks for watching, and I will be back to you tomorrow.